Alright guys, welcome to us Tibina YouTube channel. On this channel I teach how to trade the forex market. So if you're a forex trader, consider subscribing to this channel guys. Alright, so on this video I'll be showing you guys how I use ICT trading concept on volatility 75 or VIX 75, right? And the truth is that this same concept, right? I'm about to teach you guys. You guys can as well use it in any asset class of your trade. You can use it on volatility 25. You can use it on VIX 50, even on step index, whichever. You can use the same concept, right? But for me, I love to stick to just few pairs, right? So even in the forex market, I stick to few pairs, and then even in synthetics, I stick to VIX 75, right? So this is to help me to gain mastery over time. That is it, guys. So in this very strategy, what we should watch out for, right, is order flow, liquidity, and PDRA, guys. So now these three things are very important, right? So the most important one here is the three are very important, right? So the three are very important. So we are going to be making use of the daily time frame, the H4 time frame, the 1 hour time frame, and the 5 minutes time frame, guys. So personally, myself, I love using the daily time frame, 1 hour time frame, and then the 5 minutes time frame, right? So 5 minute time frame is for entry, right? So that is what we use it for. So let's quickly take a look. Let's quickly take a look at an example right here. So basically, what's an order flow? Another order flow is just the overall trend, right, of the market, right? So where the direction where the institutions are heading towards, right? If it's a bearish trend, that's a bearish institutional order flow. But if it's a bullish trend, that's a bullish institutional order flow, guys. So for liquidity, we have internal range and external range liquidity. So we have liquidity is residing above old highs, old lows, relative equal highs, relative equal lows. So all these zones, right? You are going to have external range liquidity residing above that, right? So for internal range liquidity, we have just three major internal range liquidity that you should always pay attention to. Number one is fair value gap. Secondly, we have other blocks, and then thirdly, we have liquidity void, guys. So these are the three internal range liquidity you should pay attention to. However, there are other institutional reference points such as mitigation block, order block, fair value gap, liquidity void, and old highs, old lows. There are many, guys. So there are actually seven institutional reference points taught by ICT himself. So guys, so if you want to learn more about the institutional reference point, you can drop it on the comment section. So if you want me to make video on that, guys, so I'll do that. So guys, so let's for the PD array consists of two, which is premium and discount. The premium is where you love to be selling, and then the discount you love to buy on discount, because nobody wants to buy a commodity when the price is very expensive, right? So that is just what it entails, guys. So and you want to buy commodity, you love to buy commodity when the price is very cheap. So that is the discount. You buy it at the discount and then you sell at a premium, guys. So I will teach you this strategy, how you can use this strategy as an intraday trader, and also teach you how you can use it as a swing trader. So let's quickly start from how you can use it as an intraday trader, guys. So let's see. So the first thing you do is determine your order flow. So your order flow, how do you determine your order flow? Your order flow, you love to see the willingness of the um previous candle being traded through. Sorry guys for the pause. The previous candle being traded through, right? So I just wanted to get the right words for it, guys. So previous candle being traded through, let's in this case now, you can see this was the previous candle, and then price traded through it, and then look at what happened. The next candle, price never returned to take out this low, right? It took out this this candle high, and then just like that, right? So immediately you see the order flow changed, right, after it took out liquidity, right? So I want you guys to understand that price does not just move, it moves in order to achieve a specific objective. If you have not watched my last video, which is on price delivery, make sure you watch that video. It's going to be very helpful, guys. if you watch this video, right? So that's it, guys. Price does not just move, it moves in order to achieve a specific objective, right? That is just the fact. So you need to understand that and then take advantage of that information, guys. Right. So what to watch out for after knowing the order flow, the second thing is for you to outline liquidity, where liquidity pools are residing. If you notice something, guys, liquidity pool was residing above these highs, relative equal highs. Look at relative equal highs here. These are liquidity pools, guys. So liquidity was taken out above this zone. Liquidity was taken out here as well, guys. Liquidity was taken out, right? Liquidity was taken out here because why? What is liquidity here? So in this sense, guys, I want you to pay attention. In this sense, liquidity we are referring to are buy stops and sell stops. That is the liquidity we are referring to, guys. So that's it. So price immediately price took it out. Look at what happened next. Price changed direction and then it targeted the next pull where the next point of liquidity. So after outlining that, right, the next thing is for you to go to your 1 hour time frame. So I'm just going to scroll right now. So this was the previous liquidity pool we outlined here. So let's take a look at this one first. Let's see. So you guys see many examples. I just want to show you guys so many examples, guys. So immediately, like I showed you now, I showed you guys immediately these liquidity pools immediately were taken. Look at what happened next. Price, there was a shift in market structure, guys. There was a shift in market structure, right? This market structure was shifted, right? So that is just it. Or a change of character. There was a change of character in this market. There was a change of character in this market. Look at what happened. This is a change of character, right? So if you don't want to use this as your change of character and you wanted to use, let's say, this as your change of character, it's fine. It's fine as well, right? It's fine. It's fine. But for me, I'll use this as my change of character, right? So I'll use this as my change of character. Sorry for deleting that. So I'll use this as my change of character or a shift in market structure, guys. So immediately I saw this move. This is actually a reversal pattern, guys. So immediately I saw this pattern print itself out. So what I will wait for is a reprising, right? A reprising into at least 50% of my range, right? Of this range, this high and this low, right? This range, right? This range, right? Or price should reprice right into 50% of this range and at an institutional reference point. That is it, guys. That is just it. So let's say we actually made use of this zone. So this is my shift. This is where my shift in market structure happened, right? So immediately this market shifted here. Look at what happened, guys. Price reprice into what? We have an order block here. So we actually use the candle with the largest body as our order block, right? So we use this candle with the largest body as another block. In case you don't know what other block is, I also made a video on how other block works. So watch that video, guys. So this is what happens. So if you wanted to take this trade, this is where you take your trade. So after price took out liquidity, you wait for a shift in market structure on the 1 hour time. If you look at it, so you take your entry there and then your stop loss above that high. And then what will be your target? You target depends on you, but me, I love to target just 1:3, and then I'm done actually. That's how I take my trade, right? I don't want to be greedy, just take 1:3. But if you want to be greedy, you can target the next pull up the next liquidity pool, right? You can target the next liquidity pool. And if you did that, this is actually about 1:6, 1:7, right? Trade. You would have made a whole lot from this trade. It means that if you risk, let's say $100 on this trade, you would have made more than or let's say $600, right? So that is it, guys. This is how simple this strategy is, right? So I'll just show you another quick example, guys, so you guys can see. So this is another liquidity pool that I outlined on the daily time frame. Make sure you outline it on the daily time frame. I outlined this on the daily time. Look at what price did here. The same thing price did there, right? After taking out the liquidity residing above that high, the relative equal high and other old high, right? Price, look at price came down here. It retraced, right? And it reversed, right, to take out liquidity residing below this low. And immediately after the liquidity was taken out, we can see shift in market structure. This is a breaker block, guys. This is a breaker block, right? So immediately after this shift in market structure happen, what will you do? You wait for price to reprice into an internal range sorry, to reprice into other block or the breaker block or the fair value gap, whichever price reprice into. That's where you take your trade. So we have, look, this is our, or this is our, this buy candle we are seeing right here. This is actually our breaker block, guys. This is actually our breaker block, right? We have fair value gap here, but look at what happened. Price never came back to the fair value gap, right? So that's why we have three, right? Whichever of them you see your entry, you can actually take your entry which anywhere, right? But for me, I love taking my entry at the breaker block or mitigation block. Then I'll put my stop loss below. So in case price wants to reprice into this fair value gap, it can still reprice into it. My stop loss is still below this low, right? Even though it wants to reprice into this other block right here, I'll consider this as the other block. These three candles, I'll consider these three candles as the other block, right? That's it, guys. So that's it. So this is where you take another trade. You take another trade here, and then that is just it, guys. This strategy is as simple as this. Guys, please and please don't, make sure you watch this video to the end, because I'm going to give you another this is actually a swing trading strategy, guys, that I'm teaching you. But I told you guys I'm also going to show you how to trade it as an intraday trader, guys. That is what I promised you. So if you're an intraday trader, you are not wasting your time, make sure you watch this video to the end. So it's either you target 1:3, just like I love to do it, but or you target the next pool of liquidity, guys. Look at what happened. This one, look at what happened, how price delay. It delayed, it took long, right? So this I told you, if you can only hold this trade if you are a swing trader. So it took long, right? Took long. So you can see it actually did hit what, our take profit. So this is how you can trade it as a swing trader, guys. So this is it. So let's quickly take a look at it. So if you look at something else again, price took out liquidity here. Look at what happened. Another shift in market structure, and then price revised. So this is what happens all the time, right? This is what happens all the time, guys. So let's not sleep there. So the second way to trade it, right, to trade this very strategy as an intraday trader, let me quickly show you, because the reason I don't want to show you with all this same setup, you can actually trade this same thing as an intraday. This setup here, you can trade it as an intraday trader, but then my 5 minute time frame, this trading view, it won't give me up to that data. That's the reason I have to come closer here, look for this. I think let's make use of, all right, let's use this here. So this is where price of liquidity was taken out, guys. So liquidity was taken out here. So immediately liquidity was taken out here. I want you to pay attention. I just want, that is all I need from you guys. So liquidity was taken out here, right? So and then immediately liquidity was taken out. Look at the shift in market structure occurred here on the 1 hour time frame. Shift in market structure, right? So shift in market structure, and then return to what? We have a fair value gap here that the price returned into fair value gap and another block, which is high probability that price is going to reprice here, right? Because if you watch my last video, you get to understand what I'm talking about here. So look at immediately price repriced here. Look at what happened. Look at what happened. Look at what happened. The same thing, the same concept I taught you. Look at what happened again. Price repriced into this very range, and then look at what happened. You target what? I told you always, the next pool of liquidity. This is the next one. You target it. Look at price came to it beautifully. This is 1:7. It means if you risk $100 here, you are going to make over $700 with this, just this trade. And look at it. This is with almost zero drawdown. This is it. This is how you take your trades, guys. So this strategy, it works like magic, right? So this is for swing traders. Now let me teach you how you can also frame this setup as an intraday trader, just like me, how I do it, guys. Now, these are the two things I love to do. I love to look for a trending market, and then I also love to take my trade immediately after liquidity is taken out. Now, just like this, right? This very zone, what happened there? I will still frame my setup like this. However, I will not take my entry on the 1 hour time frame. Rather, I will take my entry on the 15 minutes time frame. So I would love to wait for price to come to this zone before giving me a shift in market structure on the 5 minute time frame. So let's quickly go to our 5 minutes time frame. Let's set up from here on our 5 minutes time frame, and let's take our trade. Okay, guys, look at what happened. Price did not really do well here, but then price still did what he wanted to do. So look at what this is a high. Look at what price did. This is a high. This is a low. This is a high. This is a low. This is a high. This is a low, and this is a shift in market structure. Look at it. Shift in market structure, guys. It's I love to see my shift in market structure should be with candle body, and it actually did that. Because the reason I would love to use this as a shift in market structure is because of the momentum move. Right? If you look at the move, almost all this move here, they are all bullish candle. Almost all of them bullish candle. It means that the price is actually about to start going higher, right? So immediately I see this, right, what I will do, and wait for price to reprice into internal range liquidity, guys, or sorry, into the fair value gap. Like I told you, either the fair value gap or the other the this is actually a mitigation block, or the sorry, breaker block. We are using this now. We are using this, right? We are considering all this as one, right? So I would love to see price reprice into either 50% of the range, or like I told you guys that it should reprice. You just look for a reference point where price should reprice into, guys. So price did not reprice up to 50% here, but price did reprice into, I think, a fair value gap. Okay, there is no fair value gap here. There is just another block here. So what you watch out for, there is actually a fair value gap. Look at it. Beautiful. Beautiful. Price came back to this fair value gap. This is what I love to see, guys. This is just what I love to see. You can see price came back to this fair value gap. So this fair value gap is where you take your entry, right? So actually, I love to. I'm very conservative with my stop loss, guys. I'm truly very conservative with my stop loss. So I'll target this high. This will be my target, or I'll just target 1:3, right? So that is how I take my trade. I'll target 1:3, or I target this high. Depends on how you love to take your trade. So probably I'll just target this 1:3, and then I'm done, right? So for day trader, this is how you frame your setup. So after that shift in market structure and a return to internal rate liquidity on 1 hour time frame, when price returns, you go to your 5 minutes time frame and look to see an entry on that 5 minutes time frame. So now that the price, this market is trending, are we just going to fold our hands and wait for price to take out this liquidity pool, the next liquidity pool, before we start trading again? No, we are going to take advantage of this whole move to the upside. And how are we going to do that? The way we are going to do that is by doing, right, make sure you watch this video to the end, guys. So now, after price took out this, look at this expansion, right? Expansion took out all of these highs, right? So what are we going to do next? We are going to outline internal range liquidity. This is where the internal range liquidity comes into play now. I told you guys about external range liquidity, and we have taught you guys how to trade with the external range liquidity. Now this is the internal range liquidity we are talking about now, guys, right? Don't forget, I told you guys, internal liquidity, they are fair value gaps, other block, liquidity void, right? So look at what happened there. Price came down into this what fair value gap, right? Into this fair value gap. So now this very zone, this is where you love to take your entry on the 5 minutes time frame. Again, then you target 1:3, 1:2, depends on you, right? Depends on you, or you target the next high or low. So let's quickly look for that zone, and then let's see. All right, look at what happened. Price returned into it, shift in market structure here, but then something happened here, guys. Price never returned. This is a high momentum move. Yeah, I did miss this signal, this trade that day, but there is a signal I gave them on WhatsApp. Yeah, it was this. I'll show you guys how I was able to frame this setup. Using the same concept, guys. Using the same concept. So I outlined it so we can go to our one hour time frame. Let's see where that move occurred. It did occur in the institutional reference point. I told you guys that this is it. Look at where that move occurred. I know I gave that signal. I gave that signal. I gave that signal. It was late though. It was late though. All right, so look at price return into this order block plus fair value gap, and this is where I took this entry. This one I gave them this signal on the group. No, you cannot look at it. I would have gone to the group and then show you this signal. I gave them this signal. So look at the same thing we did here, the same thing we did here. After this happened, right? We wait for another expansion, right? After another expansion and then a retracement to an order block or a fair value gap, then we look to see shift market structure on a 5 minutes time frame again. That's where we take our next trade, targeting another one ratio two. So that's how we take our trade until it takes out the external range liquidity. Then after price has taken out the external range liquidity, we can start looking for another signal again. So this is what happened, guys. Shift in market structure here, and then a return to this order block. So we love to take our entry here. Our stop loss, I told you guys, I'm very conservative, very conservative, guys. So our TP just 1:3, not more than 1:3. That's how I take my trade. But for you, you can actually target this high. It's very still okay if you target that high. But I love to target just 1:3. I just need to build consistency. That's what matters for me. I don't know for about you. So you can see how this delivered, and it did deliver very well that day. So that very day, I told them to put their take profit here. Yeah, this it was around this zone. I told them to put their take profit. Yeah, this very zone. This was where I told them to put their take profit. And price delivered very well, very well that very day. So you can see right here, guys. So this is how you frame your setup. So I've showed you many examples, guys. So what you love to see, while price is attempting to take out the external range liquidity, take advantage of that trend, right? Take advantage of it, right? Love to see what you look to see is this: a shift in market structure, sorry, a displacement happened, right? Look at what happened, a displacement, right? Price, look at what price, this is a high, right? Price took out this high with good momentum move and return into fair value gap. We'll take our entry here. Another price displaced here, taking out this high, return into where an order block. We will take another trade from here. This is just how it happens. This is not magic. Then what happened again? Another move, momentum move to the upside, right? And then a return to what? Another block again. Then you see another move. Now this move happened. This is why this move started reverse. This is where the price reversed. And let me show you why it reversed. This is why it reversed, guys. You just need to be patient. Look at liquidity was taken out. I told you guys about internal range and external range liquidity. That is what is most importantly very important here. So once that external range liquidity that you outline, once it's taken, know that the market may likely reverse. It will not reverse all the time, but definitely it will give you an intraday opportunity. What am I talking about? It will give you an opportunity to trade a little retracement, even though it's not going to reverse fully, right? So it will still give you a retracement, and that retracement, if you are an intraday trader, you can take it, right? You just take your trade. So let me show you guys something on VIX 25. VIX 25, guys. I don't trade it, but let me show you guys something here. Something similar. Something similar. It's I told you guys these things happens all the time. It happens all the time. It happens all the time. External range liquidity was taken out here. You can see price came to take out another external liquidity. Another one, another time again. Look at this is it. Now this was exactly what I was talking about. If that price, if it case the times it's not going to retrace, right? So it's not going to reverse, right? If it's not going to reverse, then the price is definitely going to retrace. And now if you're an intraday trader, this move right here, you would have gone out of this trade, right? You'd have gone out of this trade. That is it, guys. You'd have gone out, right? Taking your profit and then you go. But for those that are swing traders, probably you might have been stopped at on break even or whatsoever. Depends on how you manage your trade anyways. Now, price has traded, right? It has traded now. Now, the reason why I'm not taking this trade is because it did not take out this high, right? Right. But I know that for sure that this price is going to retrace into this range, either this range or at least it will retrace into this other block before it will take continue. However, I'm looking at this VIX 25. You can see I'm giving you insight on how you can take opportunity of this advantage of this opportunity, guys. Sorry guys, so I just have to end the video here, guys, so it's already very long. So thank you for watching this video. If you enjoyed the video, make sure you subscribe to this channel and drop comment on the comment section what video you want or what topic you want me to make video on next.